Okay, I have a question for you about greed. How do you toe the line between being greedy and letting a trade run and leaving money on the table? I've been setting my targets on trades at the point where the RMD, rules of market dynamic, is fulfilled, composite value area high, but you often tell me to leave the trade to see how it develops once the target is reached. How do I tell when to leave it to see how it develops without being greedy and letting profit slip away in hope of greater profit? Okay, we talk about this. We talked about this before, and it's part of the trade management that you must know it will never be perfect. I told you that, but let's uh, let's go and explain how it how it uh, uh, how it will play out at some levels. Okay, we have a few types of trading. Um, first, uh, first type is scalping. Scalping, and then second type of trading is so-called move to move, and the third type of trading is trade to hold. Now, as a scalping, um, you know what my opinion about scalping. This is losing game mostly, and yeah, for someone it works, but it needs you need to have this predisposition in your character or mental games or actually um, this like speed thinking. I'm more analytical in my thinking, so this is not my type of trade. So we will focus on the on these two, move to move or trade to hold things, you know. So uh, how do I toe the line between being greedy? First thing, from your question, I don't see a greed at all, but I see more like technical question, a technical question about how to manage the trade proper way. The point is that when you are greedy, this means that your emotions is working and that you don't see the market clearly, don't see the market proper way. So again, from your question, there is no emotional response. I don't see it inside. That's good, but more like technical. What to see? First thing you should know. First thing you should know that there is no thing like top or bottom. It is, but I mean this is always the process, not the single point in time. You know. So our question is what we will it's the how you will trade. Will you trade move to move or trade to hold? It mostly depends on your pre-market preparation, and it leads you to how strong is your reading on the context. You know, so if we have strong context or extra strong context, extra strong context, just a second, extra strong context, then we will hold that we will trading like trade to hold, you know. And if context is, for instance, not so extra strong or more like the moves on the bigger time frames on our more important time frames is already developing, then we will maybe use tactics for move to move trades. So this is like type of medium read on context. And of course, scalping we can use for we have at some higher time frame targets, so we can expect some chop, but in bigger range. And now, when we come, you said that rules of market dynamics is fulfilled at let's say composite value area high. So you were probably long at this trade. So let's say this is our just a second. I have to put this on the straight on the yeah. So I can draw it more nice. So this is our reading, not reading, this is our, come on, this one. So let's say this is our composite value area low and composite value area high, and it comes price, so you obviously take return pullback setup, and we are waiting to hit the target, you know. So your entry was here, and your target is let's say target one is here. And now what we will wait to see, why I'm telling you to often to wait to see how it will play out. The point is that on the higher time frame charts, like for instance, again, this is the similar thing when I was explaining about how to properly grade the setup. You know, it could be that, for instance, for monthly charts, we just bounced from the like prices going like this, and we just bounce from the, let's say, minus second deviation, and this is how we will access the trade at that point. We're accessing the trade like fade extreme on the monthly, and this is return pull back on the CVA trade. But let's say we have some higher CVA build somewhere here, and and the and in this, let's say in this range here, we have minus first deviation on monthly. So when we already have and here is, for instance, here is minus 1.5 deviation on the monthly again. So let's for simplicity ignore the weekly or quarterly, but let's say yearly charts. Yearly charts have some on the yearly charts we have some down move. We have bearish bias, so yearly charts. Yearly charts, it's bearish, for instance, and then what is happening actually? We have extreme fade. We still don't have confirmed imbalance down on the monthly charts. Yearly charts is it's telling we have down bias, and what we will choose. What we will choose for our trading, we will choose, let's say, this one as move to trade, but what is to expect? What is to expect at this moment, as we still don't have confirmed imbalance down on the monthly charts, but yearly charts is pointing down. It could happen that we will go to the that this is our target. It could happen that this is our target, this or this. And now we are watching this range from here to here. Is this inside of average true range for the day? And if it is, then this is we can choose the two like trade to hold, but to hold to here, but more secure is as we have yearly charts against us. The the biggest time frame is going against us. Let's say we will choose that we rank this read on context as medium strength. So we will choose move to move, and then when we come here, we will take the profit here, close the trade here, and then we will wait how it will play out here. If we see acceptance picture above this CVA high, then we will take another trade, move to here, or eventually if it just run through 1.5 deviation, it's possible to take trade to here, and then again close and wait to see how it will play out. And if it's break above, then we are just cutting our expected move to the first deviation, like for imbalance pullback. So again, this is a fade extreme on monthly charts, and our target, ultimate target, this is here. It's in this case is our target for the day. Now, if you want to place totally secure, then you will close your trade, wait to play out, wait to price to play out around the key level, and when new trade set up, then you will jump in and ride this trade to the next level, and then you will close on the next level, maybe sizing out here, size out partially, and then wait to a trade to hit next key level, then wait maybe to enter long again to the this key level. But as we go already through 1.5 deviation, and we are on our way to the monthly, this is for to the monthly -1, this is maybe size out, and it will place something here and probably here, and this is a reason to exit here. Now, this is so our play is actually what we are doing. We are taking move to move. This is one move we are taking. Then this is next move we are taking. It's a trade, and this is third stage that we are taking as a trade. So this is move to move type of trade management. And but if we, let's say, if situation is a bit different and we have like yearly, it's we are coming from, for instance, from the on the yearly from second deviation. So we have let's draw with this blue that we have fade extreme monthly, fade extreme yearly. This is more stronger reading on a context. So then I'm and yearly is actually then at that moment have up bias. So yearly is bullish, but bullish in a short term bullish, long term bearish, as we have this year. We have down markets, so actually almost all the time the yearly charts are was bearish, but with the short-term bullish moves, like from auction market theory, we have auction market theory when we have some value area, and when we drop outside the value area, we expect to find some support and actually wearing of the sellers, and to price to be pushed inside. But our developing value area is going down on the yearly, so this is just like we have this occasional rip up, and they goes usually to the first deviation or to the VWAP on the yearly charts. So, but let's talk about this case when we are going on the yearly, when we have yearly short-term bullish bias, because this on the highest time frame short term bias is what is important for our day trading at the moment. We don't want to fight the trend on the higher time frames, but more like fading shorter time frame counter trends in our trading. So this is for instance that this in that case, when we have this and this together, and we have CVA here, and we take this trade. I will call this trade to hold. And this is stronger reading on the market context. So I will go with first I will go with a bigger size. And second, I will give for my entry, I will give let's more tries. Uh, Tries for enter, and third thing, I will give more room for breadth, uh, for for market breadth, breadth in a sense that that price is going up and down. I will not freak out if we have uh, some moves like the price we enter here, and with bigger size we can trade I mean better. More contracts means that we can size out that better. Then this is size out, size out partially. Price could go, for instance, something like break above, come down, then goes up again, and then goes up higher. But my core position size out, but I will holding my core position. I will not close the trade. My core position I will hold. In this case, I will hold all the way up to the target if it is inside of daily average true range or average daily range, and that's why I will tell you at that moment to hold the core position, uh, to size out partially, but hold the core position and give the trade room for breadth, and actually what we can do now, additionally on this strong read, extra strong read of the on the context of the move, we can size out at this position, and when we see the trade is actually develop a new setup for the move higher, and we have this higher reading, then we can again size in again and wait for the next target. At that moment, I'm not sure I will size out here, but I will probably size out here again. And again, yeah, sorry. At this moment, when I size in, we have here we have our core position. We sized out at this moment. My stop for core position is here. When I size in here at that moment, I will put my stop under this swing low, this last swing down, where we are taking from the rhythm of the market. But this stop is only for this part for size in size. I don't know how to say this proper way. For the if we size in with 4 contracts, then stop will be only for these 4 contracts. But our main stop is here, still here, for the core position. And if they stop me here, I will probably try to again to size in, and hold this thing. On this move here, I will size out and wait to see to go to here. Maybe I will size out partially here and then wait to see to come to the ultimate target. But ultimate target could be as a short from -2 to first deviation, or to maybe to weave up, but it depends. Now it depends on the time of the day also. So this is Time of the day is also partial of part of decision process, you know. Uh, Time of the day is part of the decision process because if we are at the end of the day, if you just take profit, you cannot hold longer, you know. It's just that's it, you know, the close of the day. But anyway, what I'm how I'm deciding, as you said, how great I am, it depends on the higher time frame and the or how strong there is read of the context of the market moves. Most, I mean, this is the main thing. And how do you tell when to leave to see how it develops without being greedy and letting profit slip away in hope of greater profit? If you have extra strong read on the market and uh, and uh, uh, you are cutting your trade on the first target, the point is sure you can as well trade move to move. But if you are not ready to lose all your profit, paper profit on a trade, you will never be able to catch the monster trade. So you by taking profit on the too early on the strong read on the context of the market, you're actually risking more than if you are than if you will take a profit later or maybe risking to lose all profit if this move blue move up is not ready just yet. It is possible it will go here and then go down, stop you, and then go up. It's possible, you know. This is part of the trading and market randomness, and you cannot do anything about this. But if you are not ready to risk your paper profit for this monster move, and you will not be able to catch these monster moves ever. So um, it, it's up to you to decide. And of course, it's up to part of decision press process is volatility. Um, why it's not working? Part of the market volatility and what's more, um, more or less that's it. You know, this more or less this is all that I'm watching um, about trading. You know, if market is extremely volatile, I will probably use move to move tactics. You know, then trade to hold, and especially like market was yesterday, last day of the year, when we are going down and just turn back up and go back to the start position for the day. Um, but this is special days in a year, and we are trading whole year. Yeah, so these special days is you need to be careful on other days like this. You know, when you're trading. If I was trading yesterday, I would probably take profit much faster and trade move to move and this type of trade management because market was extra thin. There was no big serious player in the market, like institutions or big funds or whatever they were, but not they didn't do um, anything specially. They were just you know controlling their positions. Um, so market was mostly drive by short-term traders. So in this circumstances, you can expect this sudden change in market directions and this type of the things. I hope this answer your question about how greed you can be and what to do with your greed. Greed is good if you know what you are doing and if you are doing it proper way. Otherwise, you will get the popcorn trade that will go up and come back to your position down. You know. So you have this three type of trading. Scalping is, it's I scalp when I want to, when I have choppy conditions, but I want to enter the trade on the, let's say, better um, at a better price for the much bigger move, but not scalping like scalping for the profit, but more like scalping for the better entry and like fighting for the price. And these two trade management tactics are like trading move to move or trade to hold. Uh, okay, let's draw it one more. Uh, Now price could go like the well, price could go like this, then chop here, then go again, then chop here, then go again, then chop here. So your trades move to move is this trade, this trade. You close position, then when setup is again ready, then you trade from this position, you close position, and then you trade this position, you close position. But your readings again comes from the context, and context again, context of the market is the king. So you are not fighting. You're not fighting bigger trend. You are actually fading shorter time trend in the favor of the bigger trend. Because like these moves can be actually bear flag going down and then shot up, then maybe you can have this, or maybe even go down here, something like this, and then we hit some of our short shorter time frames levels and then turn back up and go higher. But this is type of the move to move trade. And trade to hold is you just open the full size and scaling out, scale out here, scale out, just to fix the partial profit. And this is exiting your core position, exit core. And that's it. This is how you manage your trade from the greed perspective. Of course, for reading all these things, you're using all the tools I teach you in previous lessons. So have fun. Uh, and yeah, I'm recording this still in old year, so Happy New Year for you and for everyone else who will read, who will watch this tomorrow. Bye.